Thanks, Jimmy, and good afternoon, everybody. We finished our fiscal year with strong consumption across our customer base with 116% growth year on year to $178 million in fourth quarter product revenue. Remaining performance obligations of $1.3 billion grew 213% year on year, reflecting strength in sales across the board. Coupled with this rapid growth, we saw improving operating efficiency while onboarding over 800 new employees for the year. Our growth is driven by long-term secular trends in data science and analytics and enabled by cloud-scale computing and Snowflake's cloud-native software architecture. With the onslaught of digital transformation, data operations become the beating heart of the modern enterprise. Customers realize that to survive and thrive, they need to step up their data game, given what is now possible with technology. The Snowflake Data Cloud enables breakthrough data strategies. Capacity limitations are a thing of the past. There are virtually no constraints anymore on the number of workloads that can execute at the same time against the same data. The performance of individual workloads has increased by orders of magnitude, while latency has been reduced by similar proportions. The only constraints left are budgets and our customers' imagination, and we believe those boundaries are shifting quickly as well. The Snowflake Data Cloud also breaks new ground in terms of data access, which is increasingly critical for data science, artificial intelligence, and machine learning workloads. The days of mostly in-silo analytics are numbered. The promise of data science is to discover and mobilize data relationships that can be glimpsed across a broad diversity of data sources and data types. Physical boundaries between data sets dictated by technology legacies have no meaning or significance in data science. Science sees the world's data as a single universe that is easily, seamlessly, and frictionlessly traversed as if it's one giant database. That is the essence of the Snowflake Data Cloud, world-class workload execution coupled with practically unfettered data access across clouds, cloud regions, and geographies. BlackRock, the world's largest asset manager, has adopted the Snowflake Data Cloud to help make the best investment decisions for their clients. Last week, we announced a strategic partnership to launch the Aladdin Data Cloud, powered by Snowflake. Now, Aladdin clients can combine Aladdin portfolio data with non-Aladdin data to analyze faster and create custom applications and dashboards. Clients will have a single control plane to make data-driven decisions around portfolio management, trade execution, investment operations, analysis, and risk management. With Aladdin becoming a strategic part of the Snowflake Data Cloud, our shared goal with BlackRock is to create a cutting-edge industry standard for accessing, governing, and acting on data in a unified and governed data environment. The Data Cloud is inspiring more new conversations with customers and prospects, and it leads them to a different view of the data strategies going forward. Active data sharing relationships in the Snowflake Data Cloud are growing by leaps and bounds, increasing 51% quarter on quarter. We're seeing rapid adoption of the Snowflake Marketplace as well, with consumption attributable to data from marketplace providers up 48% quarter over quarter, and new listings growing 10x year on year to a total of 380 as of the end of the fiscal year. Newly added to the marketplace in Q4 are data providers such as ZoomInfo, Western Union, and Foursquare. Our continued push to campaign the largest enterprises in the world is proving to be successful. We added 19 Fortune 500 customers in Q4, including MasterCard, Genuine Parts, and Northern Trust. While customers choose to partner with Snowflake because of the Data Cloud, we still must meet customers wherever they are on their technology journey. Often, engagements begin with a migration of legacy data warehouse platforms. We have engaged in over 75 legacy migrations last year, and we have identified many more for this year. Our global system integration partners, or GSIs, have seen their backlogs multiply and are rushing to staff, train, and provision the resources to meet the demand head-on. While we team up with our GSIs, our strategy is to rely on our implementation partners for much of this work. We were pleased to welcome Infosys to Snowflake Elite Partner status during the quarter. A Fortune 100 technology company has deployed Snowflake across numerous lines of business since migrating their on-premise data warehouse platform to Snowflake. Because of Snowflake, their marketing department touts a more informed decision-making process with 20 times faster support for their customers. For fiscal 2022, our focus is to turbocharge our Snowflake Data Cloud with massive workload execution expansions and refinements, as well as expand our data federation with numerous new additions to the Snowflake Marketplace. While our selling motions address some of the world's smallest as well as largest data estates in the world, we will have continued emphasis on landing and expanding in the largest enterprises and institutions, not just in the Americas, but also in EMEA and Asia Pacific. To that end, we have announced new leadership in the latter region to accelerate and scale the Snowflake campaign there. A new global initiative we began last year and are now accelerating is a vertical industry focus, which is permeating our sales, marketing, alliances, product, and service organizations. We have long sold almost exclusively on architectural distinction, which has served us well, and we will continue to do so in situations that warrant it. But our large enterprise focus has informed an evolution to a go-to-market motion that is industry-specific and outcome-oriented. We view this as a maturation of Snowflake in the large enterprise. We also now have so much critical mass in our target verticals, coupled with industry-specific data marketplaces, that this strategy will further differentiate Snowflake. We are super excited about the new year. We have the technology, the talent, and the organization to fully pursue our opportunity. With that, I will now turn the call over to Mike.
Thank you, Frank. Q4 was another quarter of exceptional execution and a strong finish to our first fiscal year as a publicly. Our Q4 product revenues were $178 million, representing 116% year-over-year growth, and our remaining performance obligations were $1.3 billion. The outperformance of consumption spanned all verticals as we continue to see our customers deploy Snowflake across their organizations. Our strong RPO results continue to be driven by more multi-million-dollar deals, as well as our customers' willingness to engage in multi-year contracts. Of the $1.3 billion in RPO, we expect approximately 55% to be recognized as revenue in the next 12 months. As a reminder, this number is an estimate and can fluctuate significantly due to our consumption business model. The strong performance reflects Snowflake's role as both a technology solution, offering superior execution across workloads, and as a strategic partner, enabling digital transformation through the data cloud. We continue to invest in growth opportunities, and we are now benefiting from our maturing enterprise sales efforts. In Q4, we saw the number of customers with greater than $1 million in trailing 12 months product revenue increase to 77, up from 65 last quarter, with 12 customers now consuming over $5 million on a trailing 12-month basis. Internationally, we have expanded our sales force across relevant geographies. We are seeing promising traction in these markets, but remain in the early stages of this opportunity. Turning to margins, on a non-GAAP basis, our product gross margin was 70%, up 400 basis points from last year. Favorable cloud service agreements, growing scale across regions, our enterprise success, and ongoing discounting discipline all contribute to steady gross margin improvement. Our operating margin was negative 24%, benefiting from revenue outperformance and continued T&E savings. Our adjusted free cash flow margin was 9%, positively impacted by strong collections, with Q4 being our largest booking quarter, cash inflows relating to our employee stock purchase program, and operating margin outperformance. As a reminder, adjusted free cash flow excludes the impact of cash paid for employer payroll taxes on employee stock transactions. This quarter, we saw a $10 million impact from those items. While we will continue to focus on long-term margin expansion and profitability, we do experience free cash flow seasonality, and Q1 and Q4 will continue to be our strongest free cash flow quarters. We are very proud of our strong free cash flow. On a year-over-year basis, we cut our annual cash burn by 64%, or $128 million, while more than doubling the business. And we have implemented operations that will help us show more profitability while continuing to invest heavily in the business. We've ended the year in a strong cash position with approximately $5.1 billion in cash equivalents, and short-term and long-term investments. This enables us to explore a number of strategic initiatives, including Snowflake Ventures, which has made several investments in the quarter, including DataRobot, Hunters, Noma, and Lacework. Our mission is to engage more organizations with the data cloud, and all investments aim to drive increased consumption of Snowflake. Now let's turn to our guidance and outlook. For the first quarter of fiscal 2022, we expect product revenues between $195 and $200 million, representing year-over-year growth between 92 and 96%. Turning to margins, we expect on a non-GAAP basis negative 23% operating margin, and we expect 289 million weighted average shares outstanding. For the full year fiscal 2022, we expect product revenues between $1 and $1.02 billion, representing year-over-year growth between 81 and 84%. Turning to profitability, we expect on a non-GAAP basis 71% product gross margins, negative 19% operating margins, and break-even adjusted free cash flow. And we expect 295 million weighted average shares outstanding. Our outlook includes increased investments in our FedRAMP initiatives and accelerating migrations off of legacy solutions, both of which will drive enterprise customer success. In order to support our growth and initiatives, we plan on adding more than 1,200 net new employees during the year. With respect to COVID, our forecast assumes that we will continue to work remotely for the foreseeable future, with an increase to potential travel expenses in the back half of the year. We are benefiting from strong productivity in our current environment, and we have successfully onboarded and ramped new employees since March 2020. While we anticipate an eventual return to the office, we do not have a specific timeline for that goal. Before closing, I'd like to note a few recent or upcoming events. Today, we announced that on March 1st, 2021, our Class B shareholders, in accordance with our governing documents, converted all of our Class B common stock to Class A common stock, eliminating the dual class structure of our common stock and ensuring that each share has an equal vote. We view this as operationally beneficial to the company and our shareholders. In addition, the restrictions under our IPO lockup expire on March 5th, and almost all remaining shares not purchased in the private placement or secondary transactions concurrent with our IPO will no longer be subject to a lockup agreement. And lastly, we will host a virtual Investor Day in conjunction with Snowflake Summit, our annual users conference, the week of June 7th. If you're interested in attending, please email ir@snowflake.com. With that, that, operator, you can now open up the line for questions.
Certainly. As a reminder, to ask a question, you'll need to press *1 on your telephone. To withdraw your question, press the pound or hash key. Please stand by while we compile the Q&A roster. Your first question comes from the line of Raimo Lenschow with Barclays. Your line is open.
Hey, congrats. These are amazing numbers. First one, Frank, this quarter we saw a little bit more noise around kind of market activity. I think it's probably because of your success. Can you see if you've experienced any changes in the competitive dynamic out there? And then I have a follow-up from Mike.
Not really, Raimo. And things have been stable and certainly from the public cloud standpoint, par for the course there in terms of the comparisons with legacy providers. No change there either. If I sort of take a global perspective on it, say that I feel that our competitive positioning is gradually strengthening, and I'm just basing that on the types of interactions we have with customers. We're operating far more at CEO level now than at the highest level of IT. So there's definitely I feel an inflection there that is reflecting the relative position of the company in the marketplace, which we feel is very good.
Okay, perfect. Hey, thank you. And then, Mike, on the gross margins, I mean, we see the progress this year, and you gave us guidance. Just talk a little bit about the drivers for the gross margin improvement we're going to expect in the coming year, and what are the is it more the contracts with the cloud providers, or what's driving it going forward, and what's left to do for you to reach the long-term goals? Thank you.
Yeah, I would say the contracts with the cloud providers started kicking in Q3, and we had the full benefit in Q4. I don't anticipate renegotiating our cloud contracts next year. We may be in a situation at the end of the year, but I'm not expecting that. It's really driven by getting more scale within our existing deployments. We have a number of deployments where we're not at scale, and we see those ramping right now. As an example, like Japan. Japan's been running at a negative gross margin because we just don't have very many customers, but we're starting to ramp there. That will turn around, and that's just one example. We're in 20 deployments around the world, and think of a deployment as a data center out places. But also, as we move higher up into larger enterprises, they tend to buy our higher edition, our business critical. Yes, those big customers require more discounting, but the contribution margin from those higher SKUs more than offsets that discounting to drive gross margin, which gives us the confidence that we'll get to those mid-70s. It's not going to happen next year, but see that continued gradual improvement.
Perfect. Thank you. Congrats.
Your next question comes from the line of Derek Wood with Cowen. Your line is open.
Oh, great. Thanks, and congrats as well on a very strong quarter. I guess first for Frank, how are you feeling about the ability to onboard salespeople at a good clip and keep up with the demand trends out there, particularly in this work-from-home environment? And then, heading into the new year, any go-to-market tweaks you're planning that you would call out?
Yeah, so in terms of salespeople, I think we're doing incredibly well, and we're making lots of changes and adjustments that are further strengthening our organization. I'm sure you know that a year and a half ago we separated our U.S. selling organization and enterprise and what we call majors, which are our largest 200 or so accounts, and we've really stepped up our staffing in that organization, really hiring the absolute best people available in the marketplace for those roles. So I'm really positive on that. In terms of what's changing on our go-to-market, I referenced that in the prepared remarks. I mean, we are very aggressively verticalizing our selling motions and our general posture in accounts. We find it very important that when we interact with customers, there's always an industry context to the conversation. We're much more outcome-oriented. Customers are sometimes interested in architecture and things of that sort, and comparing workloads and all of that. But increasingly, when you get higher up in larger enterprises, they just want to know what it means to their business. What are other people doing? So that is a significant change, and we are investing literally at every level in the organization. So starting with products, moving into marketing, moving into alliances, as well as into sales. And so this is a very serious effort that started last year, and that will continue underway this year.
Oh, great. Thanks. And Mike, maybe one for you. Nice uptick in new customers in the quarter. Anything to call out to what's helping drive that acceleration? Is it, better productivity or more capacity, or is it something you're starting to see, this viral networking effect from your data sharing? Is that something that can move the needle and starting to help lift the customer generation?
Well, I would say there was definitely an increase in average productivity per rep in terms of the number of Cap 1 deals that they brought in on average. In terms of the data sharing, I don't have any specific data on that, but that is clearly a discussion point with every customer, and one of the reasons why they choose to go with Snowflake, or it helps the decision to go with Snowflake. But it's also the fact that we're ramping. We've been adding so many reps, and we've been ramping those people.
Great. Well done. Thanks.
Thanks.
Your next question comes from the line of Patrick Colville with Deutsche Bank. Your line is open.
Hey, thank you so much for taking the question, and congrats on a extremely impressive set of numbers. I just want to touch on the competitive environment. I mean, the earlier question from Remo was around competition with the cloud native vendors, but one of the quote-unquote legacy on-prem vendors put up some pretty impressive cloud numbers a month ago. How are dynamics with the incumbents shaping out? And I'd love to color that, please.
Patrick, it's Frank. I can honestly say that in my almost 2 years here, I've never seen the legacy provider, being in, running in the running for a go forward destination for the platform, if you will. So, and the competition, it's always moving off of legacy platforms, and the competition has been very, very focused on the on the public cloud options. What I will say is that we're seeing the public cloud vendors having significant struggles in terms of migrating successfully, off of these legacy platforms, which of course brings relative strength to these to some of these legacy providers. I think that Snowflake is really the only platform that is successfully and consistently and now at scale moving these workloads to the cloud. But just to some degree, the legacy providers are hanging in there longer because if you're not going to Snowflake, you're going to have a struggle on your hands. So that's sort of my commentary on that topic.
Yeah, I mean, that's very helpful. And can I just ask a quick follow-on to Mike, if possible? It seems like implicit in guidance is that 1Q op margin looks like it will increase pretty materially year on year. Are you guys slowing up the pace of hiring, or how should we think about that component?
No, we are absolutely not slowing hiring down. As I just mentioned, we're going to add 1,200 people next year. Actually, Q1 is a very, very big onboarding quarter. It will be probably the largest quarter of the year because we're onboarding a lot of people in the sales and marketing organization in advance of our sales kickoff that we just had. We are investing as quickly while being efficient in our business as we can.
Fantastic. Thank you so much, and congrats on a very impressive set of results.
Thank you.
Your next question comes from the line of Brad Zelnick with Credit Suisse. Your line is open.
Excellent. And I echo the congrats as well. Well done, guys. I've got one for Frank and maybe one for Mike. Frank, can you share more about the BlackRock partnership with Aladdin Cloud on the Snowflake Data Cloud? Specifically, can you talk about the economics of these types of relationships and the success criteria that you use for gauging the progress? And maybe as well, how many partnerships like this are out there to go after?
Well, there's a lot of partnerships, out there to go after. I think that announcement by itself triggered a whole rash of conversations, both from the financial industry as well as other industries. This whole conversation around customers building their own data cloud, it's really the center of their universe, the way they interact with their partners, their customers, their stakeholders is a huge idea, and people are seeing the opportunity and the potential. And obviously for BlackRock, because they are the world's largest asset manager with whatever it is, $22 trillion of assets under management, they realized that they needed to modernize and transform to be able to continue to be in a very dominant position. And it was from an economic standpoint, it's really no different than what we're doing. In other words, it's not a different line of business for us. The same product, same business practices, and so on. But obviously, these relationships are highly strategic to us because they become cornerstones to the Snowflake data cloud and the data universe, because this induces network effect all over the place. From people that need to have access to this data or provide access.
So said in a simpler way, Brad, that all of those Aladdin customers that want data through Aladdin, if they want to get their data the most efficient way, are going to have to be Snowflake customers.
Excellent. That makes perfect sense. And Mike, maybe just to follow up with you, it's great to see net retention continues to be really strong. I think best in class of anything else we look at. But as we think about the cohort of customers that you've added in the last 12 months, how are they tracking relative to prior years? And maybe just ask differently, how do we think about the size of your lands today and how that might be changing and informs your view or our view on how we might think about that retention rate going forward?
Yeah, so I do expect net retention rate this year to remain very high. It should be north of 160 throughout the year, is what we see right now. In terms of average deal size landing, that is not changing that much. But what's happening, because I want to stress, it takes customers, especially if you're doing a legacy migration, it can take customers 6 months plus before we start to recognize any consumption revenue from those customers because they're doing the data migration. And what we find is so they consume very little in the first 6 months, and then in the remaining 6 months, they consume their entire contract they had. And then when we do a renewal, that's when most customers are doing the multi-year renewals once they've proven the use case on Snowflake. And so I haven't seen much difference other than we are, as you know, when Frank came here, he really started focusing more on enterprise customers. We are landing more Fortune 500 customers. We talked about we landed 19 in the quarter, but those 19 we landed, just to reiterate, we've recognized virtually no revenue on those customers. That's all in the RPO that will be in the next 12 months.
Awesome. Thanks so much, gentlemen, and stay well.
Thank you.
Your next question comes from the line of Patrick Walravens with JMP. Your line is open.
Oh, great. Thank you. And congratulations. Frank or Mike, can you double click on the migration? So why is it so hard to migrate a legacy data warehouse? What are the steps you have to take that are so time consuming? And then what is it about Snowflake's platform that makes it so much better suited to do it than the cloud providers?
So that's a great question. So first of all, database migrations have been hard since time immemorial. They've never been easy. They've been lengthy. They've been expensive. They've been risky. And customers are quite leery of them as well. One of the reasons is that while we can analyze the data, read the structures, we can analyze the code, we can automatically convert a lot of it. Usually there is no straightforward mapping of some of the data between these databases. For example, you take some of the legacy flavors out there, they have proprietary artifacts that just simply do not have a counterpart, in Snowflake, because Snowflake is a completely standard ANSI SQL environment. So that means that, we have to re-engineer, we have to re-engineer structure, we have to optimize workloads, things of that sort. The integrity of the data is absolutely everything. When you do a data migration, what makes customers fearful is, they want to make sure that when the systems land on the other side, they are getting exactly the same results that they were getting before. So the integrity is 100% maintained. And that is just not a matter of just throwing a big switch and, hoping for the best. So that's sort of a little bit of color and texture, why these things are viewed as sort of high friction. Now, we're good at it because we're experts at it. This is what we do. And we have a ton of experience doing it. And that accumulated experience, as well as a lot of the tooling that we have to support these efforts, is resulting in very good results, very predictable results, time-wise, cost-wise, and outcome. So that's why.
All right, that's very helpful. Thank you.
Your next question comes from the line of Brent Thill with Jefferies. Your line is open.
Thanks. Frank, a lot of the customers are excited your journey to unstructured. I'm just curious if you could update us on that journey and, how far out our customers can have to wait. What are you starting to see in terms of some of the discussions around the commitment, beyond the structured stance you already have?
Yeah, well, so Brent, first of all, we're 100% committed to that. It's from a strategy standpoint, it's something we absolutely have to do. When you think of data sciences, data relationships don't just exist between like data; they exist between structured and unstructured data. That's actually where a lot of the power is going to come from, the type of signals that we can drive out of the data. And I think I said last time that we're going to really substantially update the world on where we are with that, as well as demonstrate at our June user event. So you should really expect the second half where you're going to see the real results of that strategy starting to become available in private previews and things of that sort.